Good morning, traders, and happy Friday. Welcome to the showdown. Here in the showdown, we do some live trading, and I have your favorite guest, FxBigDog, join us. So, if you're looking for some trading analysis, technical trading, we're going to teach you guys some ICT concepts, go through some charts, and see if we have any opportunities to place some live trades using our Smart Entry AI tool. So, stick around, and we'll show you guys how that works right after this. All right, welcome back. Good morning, Big Dog, and welcome to the showdown.
All right. Well, good morning, everyone. Happy Friday, and good morning, Cameron. And traders, I know that you guys are here for one reason and one reason only, is to find out what's going on with the market, find out how we can take opportunity of the trade setups, but also at the same time, you get a little bit of an update as to how we can move forward. Traders, and listen here, man, I can tell you something right now that 2024 has been a really rough ride. It's been really crazy. The markets have done some really these wild swings. And but traders, this is the thing right here, is that anytime the market does these type of things, it's never time to run away from your strategy and go, oh my gosh, I got to get away from my strategy. I got to go ahead and change and do a complete new strategy. No, it's about updating and innovating, right? It's about, innovating and evolving. That's really what it is. In order to be successful in trading, you have to be able to look at your strategy and continuously innovate and evolve. And so what it is, in simple words, is just an adjustment to what's going on with the market. And so as we look at the trading environment and we see things are happening, we look at things and if we run into some issues with regards to things that we don't like happening when we trade, we've got to go ahead and look for ways to go ahead and improve that. And so I've done that over the last probably, it's been actually about a year to 6 months to be able to find the perfect opportunity. And some people think that, hey, listen, you're putting a cap at a risk and saying, hey, I'm going to risk 5% on one particular currency pair, and that's it. I'm going to cut my losses on that. And if that's what it is, that's fine. I have found that doesn't really give a lot of room for the market to move. But at the same time, also understand that we have to make sure that we cut at certain points. I do believe that is important as we move forward, because the environment demands that. All right, the trade environment that we're trading in demands us to start looking at areas where we need to start making some cuts. Now, if you've been following us over the last 4 years, you know that I've always said that the market consolidates 70% of the time. And because it consolidates 70% of the time, there's a lot of opportunities for us to create trade strategies around that. But it's the 30% of the time where the market breaks out. How do we protect ourselves from not being caught up on the wrong side of the train? And what do we do to be able to limit our losses and then go ahead and start making decisions to trade? Now, like I said, setting up a 5% loss or a 2% loss or whatever that is, setting up those sort of parameters, it doesn't necessarily is going to help resolve your problem, because what you've got to do is you've got to make decisions based on a technical setup. All right, it's got to be a technical setup. Now, just like Cameron said, we've been talking about ITC concepts for a while inside these trading rooms, and we'll continue going to educate people of how the market moves, because trading, in order to be able to understand what price is doing, we have to understand certain concepts. And I've been teaching a little bit about the concept of AMD, which is accumulation, manipulation, and distribution. And it works with a lot of things that we look forward to. And so this is the thing that we have to establish, right? We have to establish what is going to be our setups that we're going to look for when we're going to get out of our positions. I want to take a trade here, specifically here on the US dollar CAD, and we're going to go ahead and start off with this morning, because I think it's so important that we establish. Let's just go ahead and flip over here. My bad, I didn't. let's go ahead and establish, right? What is it that I'm exactly talking about here? All right. And so as I go into this chart, I'm going to take out all the technical charts here. Let's just clean up here a little bit here. Let's hide all of that stuff. All right. Now, Cameron, I know I'm jumping ahead of time, but I think this is important for traders. And listen here, traders, I want you guys to stick around towards the end. The agenda today is that we're going to do some analysis. We're going to talk about the markets. We're going to talk about the market direction. We're going to go ahead and place some trades. We're going to introduce, of course, our sponsor, which is ACAP. And then, of course, we can't do this without our sponsors. The reason why we do these videos is because we do have sponsors that sponsor us. So we're going to go ahead and do this. We're going to go ahead and show some trade setups. We're going to go ahead and analyze the market. We're going to go ahead and show you what I'm going to do today. I'm going to show you what went wrong with the US dollar CAD as an example. And then I'm going to show you how we can resolve that problem. And then I'm going to show you the tools that we've created now to help you to be able to limit maximum losses, like taking on the big drawdowns, taking on multiple positions that you don't want, limiting yourself to certain ranges within the market. I'm going to show you that today. And then traders, I want to go ahead and say this. If you're not on my Telegram channel, if you're not on Traders Network Club Telegram channel, you may want to go ahead and do that. And we can make sure that there's a link provided in the description, on which I believe we do, Cameron. If we don't, we're going to share a link with them today, and we'll post that. We'll post that in the chat. We'll share a link of how to get into the Telegram channel for Traders Network Club. Now, why is that important? Is because we're going to be doing a live hour of broadcast that we're going to, and we might just do it on our YouTube channel as well. But we want to invite you maybe to a Zoom call. And what we're going to do is we're going to actually show you and go step by step through this process of how this tool is going to be able to help traders that have experienced large drawdowns, overexposure, and how you can limit that. And also stick with the market bias, because the market bias is important. So let me show you an example right here. Okay. So here we have the US dollar CAD. And we all know where we are with the US dollar CAD. So we had the US dollar CAD right here. And if we take a look over here, we had the market giving us a good little setup here where we had price moving inside accumulation here. Then we had this manipulation move that broke out to the upside. And so naturally we thought, okay, when the market's breaking out of this accumulation here, and we had this manipulation right here, the thought we had here is that price is chasing after liquidity down here at the bottom, right? So we had this rally, market accumulated, we had the market manipulating above the high. It actually swept the previous liquidity area, which is fantastic. That's what we want to look for. And this is a great indication that we might be in a sell zone, which means call it sell of the curve, right? So because of that, we're anticipating this to be a distribution move. And what happens is we're chasing after our liquidity down here. And that's built at 1.32. All right. So when price did this, went back up, retested the backside right here, it is very common for us to say, hey, look up. This is a nice confirmation that we're heading further down south. Now, this is a weekly time frame that I'm looking at right here that gives you a good picture. Now, we started selling and we were very bearish in this area right here, looking for price to drop down to 132. That was going to be the target, or at least the draw of the liquidity there. And so what ended up happening is this. This is what caught us, because when we started selling, price went ahead and started moving against us, which is okay. Now, we've been doing this for a while, and we've been trading the strategy, and we've been very successful over the last 10 years. And yes, we've made some adjustments in between the years. And that's what we have to do, right? Continue to innovate and evolve. And if we stop doing that, traders, then simply we just sort of applying ourselves to the market without any sort of not backup plan, but strategic plan. And we always have to, right, call the market our enemy. And so what we have to do is we always have to be strategic on how we're going to defeat the enemy. And defeating the enemy doesn't mean we go out there and actually slaughter the market, but don't allow the market to slaughter us. So that's the important part there. Now, what we're going to go ahead and do here is we're looking at this area and we're going, okay, so we got caught up in this. We got caught up in this big push above here. Now, this is where we're now looking at change. All right. The changes that we're doing, and I'm going to show you what the tool's going to do and how it's going to help you. But this is the change that's going to happen. This was an indication for us to take whatever we had in cells and start saying, enough is enough. We're done. And ride this wave going back up north, because the bias changed after this broke out. We broke back above this area right here. We broke above the previous highs. Everything showed us here that the bias had turned bullish. Now, let me just go ahead and explain. Our current strategy we used at the time was always to go ahead and continue to enter the market as the market rallies, takes out liquidity, pulls back, we go ahead and take a profit, and then we start looking to reverse it. So selling right here was part of the strategy. It is exactly what we did. We stuck to the rules. We stuck to the process. We did good by following the rules. The market, however, didn't play ball. The market didn't do what we expected it to do, and that is, of course, rebalance, right? It's taken its time to do that. And traders, we've mentioned this before, and we'll mention it again. What are the reasons the market moves? The reasons why the market moves is because of 4 reasons. It rebalances equilibrium, rebalances insufficiency, it hunts for liquidity, and it creates liquidity. And because of those reasons, and again, it's because of those reasons that the market moves. Now, everyone can go ahead and post out some not technical analysis, but more written content of people posting things on the web and talking about where the US dollar CAD's going, talking about all these things about why the dollar's strong. In most cases, all that information is based on hindsight. They're taking and looking at where the market's at right now and going, oh, you know why the market's over there? Because of this, because of that. But at the time, nobody really had a very good idea, because traders, the market doesn't move just because of news. News makes the market move to certain levels and helps it move to certain levels, but that's not why the markets move. There are the 4 reasons why the market moves. So it's always going to be based on where the smart money is trying to drive the market, and of course where liquidity is sitting based on retail traders. And so because of those reasons, traders, we're becoming a little more let's say, tuned in to what the market environment is now demanding. And so as we look right here, I want to go ahead and let everyone know that I am not oblivious to the fact that we're in a bullish bias here on the US dollar CAD. Although we're holding on some sell positions, or not some, plenty sell positions on the US dollar CAD, I still understand that the market moves in these different wave structures. And of course, it creates these different patterns. And so as we move forward, we are going to be looking at biases. And so what we're going to do right now, we're going to go ahead and take a look at a couple of trades. And we're going to place a couple of trades using this technique. And I'm going to go ahead and show you how this technique works. And then I'm going to show you how you can use tools. So if we are, for instance, wrong on the bias, or the bias changes, we're going to be very quick to go ahead and say, it's time to get out. Now, traders, I want to make everyone clear on this. For those that have taken some losses, for those that have had some hardships here in 2024, for those that are looking like, big dog, what's the recovery process? How do I recover? I want to go ahead and say this, traders, that there is always hope and opportunity to recover from anything you've gone through. There is never a time that you should be sitting back and saying, big dog, it's all over for me. It's done. I'm done with this. All right, because I've got no hope on what this is going to do further moving forward. All right. Now I can understand emotions may kick in, but I want to put this thing in here. I want to put there's a little bit of hope in your mind right here. I want to show you something. And a lot of you that have been following our trade ideas, a lot of you, I'm telling you right now, I know it is for a fact, a lot of you made a lot of money all right, when things were going very well. Now, like I said to you earlier on, the market consolidates 70% of the time, and it trends only 30% of the time. And so look back and say, when were you really doing well? And when did things go a little rough for you? It's when the market broke out. So, which means, traders, if we can limit, all right, the breakouts and limit our losses to the breakout and stick to where the markets are ranging, right? Stick to the market where they're ranging. If we can make a lot of profit, and I'm going to show you an example right here. If the market goes around and moves like this, and we can make a lot of profit here and limit our loss when we get breakout to a point where we can actually reverse it and go into the right direction of the market, then what we're going to do is, if you made a lot of money in these areas, and this is where you started giving back your profits, and we start limiting these losses, and then we can go back to the market's consolidation again and make money again, it's going to absolutely turn the way, turn your results in a very positive way. Traders, listen here. I've been looking at this for a year to 6 months, analyzing the market over the last 4 years, and looking at what is going to be a good solution for us to limit this. Trust me, what's happened right now in the US dollar CAD and the Euro US dollar is not what made me change, or at least focus in on what we can do to change. All of this took place over the last 4 years, and I noticed that, and I've always said to you guys, I say, guys, listen here. And I've had some conferences with some traders that I've spoken to, and they're like, I am absolutely kidding. I've got traders that are telling me they're making 20% a month, 25% for a month, consistently over the last 2 years. And I'm like, that's fantastic. But remember something. The markets will 1 to 3 times a year have these big breakouts. And if you haven't managed your risk correctly, and there's a lot of ways, and that's the thing, traders, you've got to realize that surviving in this market's not about how I can change the strategy, but more how can I manage my risk to be better. And sure, maybe in a certain environment, your risk management works okay there, but as the market environment changes, you have to adapt to it, because what worked then may not work now. And that's why you have to make those changes. All right. And constantly be focusing. Traders, that's your biggest job. Not to look for trades. We'll send that out to you. But your biggest job as a trader is to manage your risk. And you have to manage it based on your situation. I can't tell you exactly how to do it. Obviously, we're not NFA registered. But or we're not CTAs. But what you can do is you can take a look at your situation and manage your risk accordingly. And so we're putting some elements in that are going to help improve that process of you actually understanding what the market is and where the market's going. So let's go ahead and talk about these trades. All right, traders. So let's go take a look at these trades. And I'm going to go ahead and say I'm going to analyze the US dollar CAD first. We're still in our bonus trades, holding on to US dollar CAD. We've got some short positions there. We're clear on everything else on our bonus trades. So I'm talking about trades we do here in this live session, all right? And so what I'm going to do is I'm going to break down the US dollar CAD and give you guys a little more insight of what's going on with this pair. And then we're going to go ahead and dig into some other pairs and place some trades. All right. So with that being said, let's jump into this pair right here. All right. So we've got the weekly time frame open here, and a couple of things I have to point out here. Number one, traders, we've got this range that the market has been sitting and trading below for the last 2 years. All right, below 1.40. All right, just about. All right, so this is 1.40 right here. Now, if you take a look at this level and you go back, you'll see that there's only 2 times that the market has actually broken through this level, right? And that was back in 2016 and then 2020 during COVID or pre-COVID, right? So we had here in 2016, and then we had it here in 2020. All right. So here we had the two times that the market has broken above that 140 level. I'm going to go mark it off right here. It's around about 139.68. All right, give a few. So it's only been twice the market's been above this level, and that's been since what 10 years ago. So it's going to have to take a lot for this particular pair to stay above those levels. That's one thing. Another thing is I've gone into the monthly time frame, and I've taken this area right here, this area, and I've looked at this area too. And these are areas where price will look for equilibrium. And so I've gone ahead and marked off here equilibrium, and I'm going to go ahead and show you the chart. Equilibrium is sitting here. This on the monthly, you can see on this screen, it's sitting here at what is that? 43.72. 43.72. If we look at price is currently trading just above that. But what we've done is we've come out of this accumulation here, right? We've come out of this accumulation. Price has now gone ahead and, in this case, manipulated to equilibrium. And so traders at this point right here, and the fact that we've only been above 140 twice, this is the third time in 10 years, means that traders that we could see the market slowly pushing back down again, getting back to the under that 140 level, and then start looking. Look, if it gets back below the 140, where's it going? Traders going back here in distribution. So this is, I don't care what you're reading. I don't care what other analysts are talking about. I'm telling you right now, this is a manipulation move. So remember, AMD, we got accumulation, manipulation, distribution. When price manipulates, it goes to liquidity or rebalances. All right, so either rebalances or it looks to rebalance insufficiency or rebalance equilibrium, right? Or it goes ahead and hunts for liquidity. All right, that's what the market may be doing. And so what do? We don't just say, all right, let's go ahead and the market's in a sell now. No, just because it's hit equilibrium doesn't necessarily mean it's going to just sell. It means that we have to look for the signs of where the market's going to go. And so if I look over here and I go ahead and break this down now to a weekly time frame, what am I looking here? I'm looking for the bias to change. What is the weekly bias at the moment right now? It's bullish. Let's just face it, it's bullish. And hey, if you have to let me confirm that, here it is. I'm going to go ahead and confirm that. Let's take a look here. US dollar CAD. There it is. All right, US dollar CAD. We're in a bullish bias. Okay, we're in a bullish bias. Euro US dollar. We're in a bearish bias. Okay, now even though that is stated that we're still in that bias, what we're looking for is change of market structure, right? We're looking for a market structure shift. And so we're not going to see this right now on the weekly. What I'd like to see, and it may very well not happen this week, but what I'd like to have seen is the market trade below this level right here. If we traded back below here, then this could be just a manipulation move and, of course, price moving back down. But it's not. So let's go to the daily. Here's the daily. Now, take a look at the daily. The daily range is bullish. There it is there. All right, we have a bullish range. We have price manipulation here above the range, and now price is inside this range looking for a test of the bottom range. So I'm going to say that in today's trading, we should be bearish, and we should be bearish in next week as well. Next week, we should be seeing a bearish move towards the low down here. Now, that's around about that 143 level. Not too far away, but 84 pips from where we are now. But what's important here, traders, is that we break below a 4-hour fair value gap. The market's respecting that level at the moment. So if I go over here to the 4-hour, and I'll show you what the 4-hour is doing, there is an order block sitting here on the 4-hour. There is a fair value gap. This is why the market's struggling a little bit. If we can break below this is called now PD arrays, right? And this is going to be a bullish PD array until price breaks below that. If we break below that, then these areas are going to become resistance. And that's what's going to be important for us to look for a downside move. The weekly time frame may then take us until next week, maybe the end of month, in order to show us a U-turn in the weekly. It may take us to the end of the month to show something on the monthly that's going to be something worth looking at. Now, traders, when I get a clear confirmation that the bias has changed, this may set up an opportunity for me to start trading in that bias, but not just go ahead and add in without any plan, but really going ahead to add into this position with a clear a clear level of where I would cut my losses if price changes. All right, if the bias changes to back bullish, I will certainly go ahead and cut those positions that I added in. So, which means that I am looking for a long-term, or let's say mid-term correction in US dollar CAD. Is it there now? No. When it does arrive, it's going to be an opportunity. And trust me when I tell you, traders, don't miss out on the opportunity, because you're going to be looking back and saying, I was so focused on everything around me that I never saw the opportunity. Now, I will make sure that when I see this, I will be posting this on my Telegram channel or all the social medias pages that I have. So if you're not following me on social media, Instagram, Twitter, Facebook, all that good stuff, on our Telegram channels, even Traders Network Telegram channels, social media, if you're not following, you're going to miss out on the opportunity. I want to make sure you're there, because we have the tools that are going to help you to be able to add into those positions, to be able to manage those positions. And if the biases change, very quickly go ahead and liquidate, get yourself out, and look for the next opportunity. All right. Now, let's go take a look at the same concepts in trade setups right now. We're going to go into the New Zealand CAD, Aussie CAD, US dollar CAD. Sorry, not US dollar, Euro US dollar. All right. And then I'm going to go ahead and show you the tools while we're doing this that's going to help you guys become better and understand better of what's going on. All right. So, Cameron, let's go for it, my friend. You got the first opportunity. I'm going to give it to you. Which pair are you going to go ahead and chase?
I will I will take a look at the New Zealand CAD.
All right, New Zealand CAD it is.
All right, so let's go to the weekly. We have now traded into a weekly fair value gap, buy side balance that was holding as support. Here was the key areas that price came back to refer to that weekly buy side balance and using it as support. So we were trading back into that range. We've now also taken out sell side. Let's go zoom in a little bit. So here's sell side liquidity. We do have some relative equal lows here. Now there's a side of me that's telling me that we could see a breakout through this because of these relative equal lows, or we could just see a wick, a candle wick down below into these relative equal lows right here. Okay, I'm gonna go ahead and mark that. Let me annotate that for you. That's what I'm looking at right there. That's sell side liquidity right there. There's reason for me to come for price to run back there. Now, when I look at the higher time frame, I want to be bullish. I want to continue to take out this low resistance liquidity here. We had this change in state delivery to the upside. We had this disruption year of sell side liquidity, and we've respected these bullish PRAs. Okay, so when I go back to now to the 4 hour, first thing that tells me is that we could maybe see a run below this fair value gap to that sell side liquidity. But at the same time as well, we had FOMC on Wednesday. This is our data high from that run to the downside here. I know there's just a lot of liquidity sitting here, okay? And we also have this imbalance here, the sell side imbalance that was created during that news drive, okay? So insufficiency was created during that news drive. So there's an opportunity for price to run to midpoint of that gap, or I possibly wanted to see it run higher to this data high. That's where I know there is going to be some sitting liquidity from the news drive on Wednesday. Now we can see we're accumulating a little bit in this fair value gap. There's a lot of accumulation, very staggered below. Could tell me maybe we see a run to this minor buy side. Okay, that could be a key area. If price wants to break through, we could see a run to minor buy side and then a run below this. So what I'm going to do is I'm going to think I probably would want to wait and see how price reacts in this insufficiency and see what it does, right? But if I wanted to take a trade right now, I'm gonna say the buy is gonna be the safer bet, because if price does want to go ahead and break below, I could see it taking out my buy side before it does want to break below. And let's say if it doesn't, it does want to break to this sell side liquidity, we'll see price run to sell side liquidity and come back to retest this fair value gap. So if we add positions here and we come back to retest this area, this accumulation into this fair value gap, what can now act as resistance, that would be that would help me by adding positions. We come back to that area of the area of the fair value gap. I could get out of that trade as well. So I think, yeah, that's what I'm going to go ahead and do on the New Zealand cat. Is I'm going to take a long on the New Zealand cat.
And I concur with Cameron right here on that. And the reason why I do is because if you take a look over here, and I've been talking about this for a while, if you look at the weekly bias right here, you see this big candle going up right here. This candle right here has held pretty strong. Now, we had the market creating this bearish candle next to it, and then we had this big weekly candle. And this weekly candle did not close up 25%, but it certainly did close up bullish. So if I look over here, I did have some parameters set up here that I'm always looking at the market closing up 25%. And so if it doesn't, then it's just really just a test of the highs and maybe manipulation, and then price is going to move back down again. So and so what's happening right now is the weekly has broken down here, and this is the thing right here. It's broken down here. You see how it swept the low there. So after the market sweeps the low, a very good mentor of mine called the FX Chief. Many of you may have known of him, Jared Martinez. Always used to say, since the day I met him, bulls score a point, pull back. Bears score a point, pull back. Right? That was his mantra with regards to price taking out liquidity. Right? Bull score a point, pull back. Bear score a point, pull back. And so this is no different, right? We have bear score a point. Now we're looking for pullback. All right. Bear score a point, take out the low, pull back. Bear score a point right here, pull back. So when Cameron goes ahead and says, hey, I'm going to go ahead and buy, it makes perfectly good sense, because after the market takes out that, it's pullback. Now, let me go ahead and, all right, so Cameron, you got to buy in the net. Let me go ahead and take on the Aussie CAD. All right, so here we go, Aussie CAD. Aussie CAD, we can see that the market's testing this. You see there, we have equilibrium in this area right here, equilibrium sitting right here at the fair value gap. I've got the fair value gap sitting over here. I've got the market showing here that we do have a indecision candle. It was because of this indecision candle that I've been going bullish on the Aussie CAD, and because of the sort of the indecision that we've had with news out in the in Canada, I've made a decision to go ahead and just keep at the support and keep buying. But traders, this might be a change in bias. And I want to just say this, right, that the bias has been bearish. How do I know? Well, take a look over here. Now, I'm going to show you something right now, traders, that's going to be so important. If I go to the Aussie, let's see here, Aussie CAD, what does the bias say? It says bearish. Now, this is where traders are going to benefit from this. This is what this indicator is showing you. It's saying the bias is bearish. All right. But look what it says here. Master status is bullish. The last signal we had with the regards to the trade signals was a bullish signal. It's telling me that we've got 3 trades in, and it's telling me my break-even point. My break-even point is at 0.9003. My 3 trades in. Now, why is this information going to be important for you? Well, this is the thing, traders. You know the trade signals that we pass on to you. Now you can start thinking about it this way. Say, okay, Big Dog's sending out a trade signal. Big Dog, based on that strategy, buy supports their sell resistance, says, hey, let's go ahead and buy in on the Aussie, New Zealand, or the Aussie CAD. The signal says buy, but the bias is bearish. What do you do? What do? You stand aside. You don't go ahead and buy in the first trade. If the bias is bearish, the signals is bullish, then that is not in the direction of the bias. Even though it's based on support and resistance, and if the market's hitting support, we're probably going to buy. But that doesn't mean that you need to go ahead and buy. So this is how you can protect yourself and limit yourself getting into positions early. And maybe, and I've sat with a bunch of traders a couple of years ago, or actually not even years ago, about a year ago. And these traders says, Big Dog, you know what strategy I've been using, following your signals that I've been making 20% a month on? Is that I don't always get in on the first entry point. Sometimes I wait for the third, fourth, or maybe even the fifth entry point. And so what this is going to do is going to allow traders to say, hey, listen here, although there's 3 trades in here, because the bias is down, I'm not going to go ahead and buy that. And so maybe what I might do is if this changes, and just so that you know, this indicator, all right, is going to show you when the next signal is. Doesn't matter if it's long or short initially, but what it's going to show you is we're going to be sending hedge strategy signals, which means traders, if we buy and the signals changes, let's say we buy and we go 3 positions in, and then suddenly the signal changes, which means the bias, the intraday bias changes to bearish, and there is a signal for a bearish setup. Guess what? We'll be sending you a bearish signal. And so what's going to end up happening is this is going to change. We're not going to stop managing those buy positions, but this will change that the master will say sell. All right, it'll say bearish. And it'll say entry point, and it'll say 1 entry point. And then you can look at this and go, hang on, the bias is bearish, the signal is bearish. Guess what I'm going to do? I'm going to go bearish because everything is in line. The bias is in line, and now the signal is in line. We have confirmation. And then you go ahead and you sell. And then we're always going to have a rule in place where if the bias changes, there's going to be cutoff, which means that you can get back into the current trend with the bias. And if the signal comes up that says bullish, then you buy and you follow the signal. But you see how this is going to help you to stay out of the market until the market bias is in the same direction as the signal. So although the signal says, hey, buy, and a lot of traders will say, Big Dog, why are we selling? The trend is going to, down or up, whatever. Why are we doing this? Why are we do that? Now you're going to know exactly why. So what you're going to do is you're going to get here an update. Every 30 minutes, you will get an update of what the bias is, what the signal is, and where the entry point is, and how many entries are in. Don't ever have to question it. Don't even have to question it. So you'll know, which means, traders, that as soon as a new signal comes up, that signal will be posted. And just as you know, those signals will also be using a level where it'll be deciding that the bias has changed. We're going to liquidate positions. You'll get that if we'll have trade signals available where you can actually take a look and see if we cut losses and we decide to cut losses, all those trades will be cut, and you'll get a signal popping through our Discord channel, and you'll know exactly when that change comes in. All right. So going to the Aussie Canadian, what does it tell me here? Aussie Canadian says, hey, we should be it's a bearish bias, but we've got some bullish signals here. We've got 3 entry points, 90.03. So let's go to our chart. 90.03. So currently right now, price is at 89.68. It tells me that I should be bearish. All right. So I'm looking at this and going, okay, well, if the bias is bearish, then should I be buying or selling? Well, I'm going to go down to my 30-minute chart. Now I'm going to go ahead and look at this, and I'm going to break this down. I'm going to say, okay, wait a minute. Here it is. Actually, I'm going to move to the 4-hour. There it is right here. So now I'm looking at this and going, all right, remember Cameron spoke about that insufficiency? We have it right here. All right, we have this insufficiency here. If you want to stay with the bias, then yeah, maybe the market's going to come up here and then go back down. But if you stay with the bias, you're in the right direction. So without even thinking about traders, all right, without even thinking about it, without even trying to analyze and talk about fair value gaps, talk about all of the other stuff. If you're a trader that says, Gary, I'm a very simple trader, I don't want to go ahead and complicate things. How do I just get in and trade it and know that I'm in the right direction? Well, what does the bias say? It says bearish. So can the market go up and then come back down? Sure, it could do that. Do I need to worry about all that stuff? No. What I do need to know about is how do I enter the market and trade their trade. So all I'm going to do is go ahead and sell. Sell. The bias is bearish. Cameron, let's go ahead and sell. Now, you could also wait until we get a bearish signal, because at the moment right now, as I mentioned, the signal right here says what? It says it's a bearish bias. Where is it? There it is. It says bearish bias, signals bullish. So that means that, yeah, sure, we can go up 25 pips or so and then pull back down again, right? Sure, you could trade this, but then you're trading against the bias. So if you said, hey, big dog, I want to stay with the bias is bearish. Why are you looking for to buy it? Don't buy it. If the signal says bullish, that's okay. That's based on support and resistance. All right. It's not based on the bias. So if you want to buy, you trade in the direction of the bias, now you go ahead and buy. All right. Now, traders, we're going to set up a live stream on this. And therefore, traders, make sure, if you're not already subscribed to our Telegram channel, it's free. Go to the Traders Network Club Telegram channel, as well as the FxBigDog Telegram channel. All of this information and how to be able to get this information is going to be available very, very soon. We're going to be releasing very soon, and how you can get your hands on it. And what we're going to be doing is, it's going to be unbelievable how you're going to be able to get your hands on this stuff. All right, make sure you guys are following us on the Telegram channel, Telegram channels. All right, traders, I've got a few more minutes and I've got to let go. All right, I'm going to let Cameron continue, but let's before we go, I'm going to go ahead and just go ahead and thank our sponsors real quickly here. All right, traders. Well, I'm going to leave you with Cameron. Cameron's going to go through some additional pairs right here and talk you through some additional setups on the CAD Swiss, as well as the Euro US dollar. So enjoy it. Have a great time, and I'll see you guys. Listen, guys, we will be broadcasting again next week, Friday, and the Friday after that. So make sure you guys are available for those sessions. We'll update you. Make sure you're subscribing to the YouTube channel, subscribing to the Telegram channel, and Cameron's going to go ahead and cover the other pairs right now.
All right. All right. My throat's a little messed up this morning. Welcome back. Let's go over. We do have the CAD Swiss and we do have the Euro US dollar to go ahead and trade this morning. So I see someone's changing my screen here. Let me just. Okay, there we go. All right. So let's take a look at the CAD Swiss. And first thing we notice, let's take a look at the weekly. Very, very accumulative. Okay. A lot of accumulation going on the CAD Swiss. Nothing to really be said. Not really a good price action on the CAD Swiss here. So if we take a look at the daily here, we came back down. We had relative equal lows. Okay. See this low and this low right here. A higher low, creating relative equal lows. Came back down, swept that relative equal lows. We had then a retracement back into this bearish order block, and then we see price continue to run lower. So going to the 4-hour here, what do we see? We see price then retrace back to that bearish order block there in the high time frame. We displaced lower. Again, create insufficiency here. Price came back at midpoint of this gap, continued lower. So breaking below this buy side imbalance that was acting as support. This was the move to that bearish order block here, right? So right now, looking at the CAD Swiss, I wanted to see it when looking at the higher time frame here. I wanted to see it make its way higher. Okay, we had this manipulation here and this distribution. We didn't really hit our extension levels here. We had now a retracing back to what we would say is we have this breaker block here. Okay, so we have a breaker block. Keep that in mind. If you don't know what a breaker block is, it's this bearish order block. that price then failed and traded above it. Okay, so it can act as an area of support. So price is coming back into this range. So I'll go ahead and mark that for you so you can see what I'm talking about here. So it's coming back into that breaker block, but it did run below this insufficiency that if price wanted to refer back to it, I would want to see it respect this area if it wants to continue to trade higher. Never did. We came back into the sell side balance, respected midpoint here, never trade into this upper quadrant, and we displaced lower. Create insufficiency here where we wicked into that and continued lower. Bodies never trade inside this. So right now, looking at the CAD Swiss, it seems like it's running pretty bearish. It seems like it's delivering sell side. That's what the algorithm is telling me right now. I would rather prefer to wait to see what price wants to do in this range. If it wants to continue lower, because where is liquidity below, right? When you look below here, the only liquidity that I see here is this huge candle wick. So there's a rejection block here, or there's insufficiency because price creates insufficiency with candle wicks. Okay, so this could be a key area that price could want to trade into, is where price left this range of insufficiency to then come back and rebalance that. So that would be the only reason that I would expect price to run lower. We did have this run taking out that buy side liquidity, and then we just continue to displace away from that range. So looking again here at the CAD Swiss, it's pretty hard to tell where price wants to move as of right now. There would have to be a little bit more patient to see what price is doing. And as you can see, we're in that breaker block in that buy side balance. I'd love to wait and see what price actually does there and how we react. So going back to the 15-minute time frame, and let me take this off right here. We can see we took out this low right here, came back and took out this high right here. Okay, again, gyrating. We're gyrating right now. So where's the weekly new week opening gap? It's above there. Okay, we go back to the 1 hour here. There could be a reason to come back and take out this minor high right here, about 16 pips. That's not enough. We could wick to that new day opening gap, which is right about there. That's pretty tight for 20 pips target there. So what I'm going to do here is, because we broke below this, I think we can make more moves to the downside here. We accumulate, we manipulate here. Let's take a look at this manipulation as our standard deviation. So going to the 4 hour here, that's where we could see price continue to run if this was a manipulation and we're expecting another expansion move lower, okay? So I'm going to say, all right, we never got that bullish run to this premium array. This is where I wanted to see price run to. Never got that run. We displaced lower, respecting constant encroachment of the sell side balance here. Algorithms delivering sell side. I'm going to look now to see, all right, we might continue to run bearish here. So delivery sell side here would be these extension levels. So I'm going to go with the sell here on the CAD Swiss. And then we can take a look at the Euro USD. One thing I'm noticing here is we had this low right here. Okay. This is when we disrupted this sell side here. It created very jagged down here. We tried to trade above the sell side balance. Look, it acted as resistance. Never did. Okay, so coming back here. Here we had that FOMC on Wednesday. This huge candle right here. What did we do? We came back lower. Never swept sell side and retraced. Engineering more sell side liquidity down low. Okay. Now, what I wanted to see here on yesterday is the news drive on Wednesday. The rate decisions there. I wanted to see price trade above constant encroachment of this gap. Okay, this right here, these levels right here that you're seeing that's annotated on my chart. This is basically the fair value gap of this huge down close candle. Okay, so that is just the fair value gap, and I've annotated with these levels to see, okay, where's midpoint? He has midpoint right here. And I want to see how price traded, if it can trade into that upper quadrant. Because if we could trade into that upper quadrant, then the FOMC high of Wednesday, that data high would be a key area of liquidity that price would want to go ahead and gravitate to, including where that new week opening gap is annotated as well. You can see this purple line. That's the new week opening gap of this week. Okay, the newly week opening gap. So that to me is just where price likes to draw to. So that to me is where I would really expect that price can make a run to an attempt run to that area. But coming out to Friday, we had the news on Wednesday. Coming now, we're on Friday. We haven't even traded above this constant encroachment. So to me, then it's really saying that price is pretty weak. It doesn't seem like it wants to make an attempt to that area. So going to the 1 hour, it's gonna probably what I would probably expect here on the Euro USD is we're gonna see a accumulation delivery right here. Okay, I'm expecting we're gonna see some accumulation because we had such volatility in the market on Wednesday. This to me is gonna be a run, accumulation, and then looking for some sort of breakout of this range. So we're pretty close to this high. What I'm going to do is because this accumulating, I'm going to play it as pretty simple trading for those that love support and resistance. When usually we're in a range of accumulation, consolidation, support and resistance can price can refer back to those ranges of support and resistance, right? So those areas can hold up in an accumulation range. So going to the 30-minute year, we kind of ran up. We never took out this high, kind of jagged. But again, running a little bit lower. If we can run below this low right here, this order block, I would expect us to continue lower. We have this new day opening gap right here as well. Price could also gravitate to. So what I'm going to say is, all right, because we're in this accumulation range, there's not much going on. I'm going to take a sell here on the Euro USD. And we got about just 20 pips to that new day opening gap there. Okay, expecting just a bunch of accumulation for the day till we get back into next week's trading. So let's take a sell here on the Euro USD. Okay, not a lot of good price action, at least for today. Obviously, with all that volatility that was pushed into the market on Wednesday. All right, so that is all the Forex pairs there, guys. I will take a look at NQ just to give you guys. Oh wow, look at that. So first thing I noticed is I was very bullish coming to this morning. Obviously it's Friday, so thank God it's Friday. Looking for that 20%, 30% retracement. There's that yellow line, and that yellow line, that's the 30% retracement of the weekly candle, and that's 20% of the weekly candle. So coming to this morning, we had this buy side liquidity over here. Okay, this is the Asia high and the London high, relative equal highs. Okay, so you can see equal highs here. That's where I was looking for price to gravitate to, which is already has completed. Never gave me a good entry level. Okay. We have created minor sell side here. So what I'll be looking for is if we coming into that 10 o'clock range, if we want to reverse, we already got a run below here, engineering more sell side right here. So this again is going to be a key area that price will gravitate back to. Okay. Engineering more sell side liquidity, relative equal lows. So now we're trading back into this range, okay, into this inversion. So we have this big gap right here. We're trading into that inversion. So if we can look for some sort of internal model here, trading back to this minor sell side, and maybe if it makes an attempt below this constant encroachment, it can make an attempt run to this minor sell side liquidity as well. Okay. So we had that retracement. This was the correction for Friday. Hit that 20% retracement. Took out a key area of liquidity as well. There could be a possibility reversal now to hunt those areas of sell side liquidity that's in below. All right. That is pretty much it, guys. I hope you guys enjoy the rest of your day. It's Friday, so enjoy the weekend. We have Christmas and the holidays next week. So take care, be with your family, enjoy it, and Merry Christmas to you guys. We'll catch you guys back. I think we'll be having a session next week. Not sure. We'll probably announce that, but if we do, we'll see you guys next time. Take care.